Welcome in, you trader nerds. It is another Monday after a savage top weekend with the invasion of Israel. I don't want to talk about it. I can't even get on to Twitter or X or whatever it's called now because of the brutal images of what happened over the weekend. And it's amazing that we didn't see more fear in the markets, but we really don't see fear in the markets really with this, which is interesting. Last night I was like, I didn't even check it at 6 o'clock. When the market's open, I was like, I checked maybe at 8 o'clock, and I go, okay, it's down like 0.74%, and then it's just like all fear has subsided. And look, our big green monster called the top right there. This is an inflection point. We know it's going to be an inflection point. What do we anticipate? Well, we anticipate we come up here and then it goes back down to the point of control, then it bounces up, probably go back to the yellow line, and it's going to probably come back in here and fill these gaps. So we are fairly priced, ladies and gentlemen, fairly priced. Let's look at our 200-day moving average. We are right at the line there. Remember, this is one of the things that tells us whether we're with a bullish or bearish tint. This gives you a little bearish tint there. Let's look at the 10 and 20 on the weekly chart. We're below both of those. That is a bearish one. And then we go to the monthly 10 moving average, and we are just above it. So 2 out of 3 gives us a bearish tint in the market. If we look at our little thing here, we are almost flat, y'all. Look at this. We're almost flat. But interestingly enough, our linear regression is it's holding up pretty good. Had a good green candle on Friday. Got a somewhat green candle, it looks like today, even though it's really a kind of a down day, isn't it? Because if we ended, let's say here, then that is down from what it was on Friday. So interesting. Let's look at our portfolio, y'all. Our portfolio looks sick, but we still got an 85% probability of a profit, and 38, 645, 60 is our net lick. That's going to be, who knows if it's up or down, because I got to start a new spreadsheet on this one. But let's just look at our metrics really quick. First of all, though, let's go to the expected move. Let's see what this looks like on the expected move. Okay, so we're right in the middle of the expected move for the week, and looks like we're at 43.76 on the high, and on the bottom it looks like we're at 42.40 on SPX. So we shall see. Look at this, y'all. We had some support last week, right? It really didn't go outside the expected move. It held up really nicely. So we'll see if it holds up this week. So let's look at our Greeks on this particular account. So 143 delta, 115 theta, 66% of our buying power. I don't think there's really anything to do in this one. Just let it keep going, right? Just not overtrade it. Let's just let it go. And everything looks fine right here. We'd love to have our break even down here, but we're down to 1 standard deviation. So I will be watching the market very, very closely to see if I need to put hedges on. But as of right now, no hedge is necessary. I really have thought, though, what made me during the COVID crash go, holy cow, something bad is really, really coming around the bend. And I'm thinking almost that I have a similar type situation now to where I go, whoa, things look really bad with what happened over the weekend. Then I start thinking about, hey, the U.S. released $6 billion back to the Iranians, however you say it, and they're close to getting their nuclear weapon. And then I remind myself, though, that fear is overpriced, right? Fear is overpriced, and there's no fear in the market now. Is this the market getting it wrong? Should the market be fearful? Should the market be taking into effect that if you give a terrorist state $6 billion, that they're going to use it to fund terrorism and potentially, finish their little nuclear program, which they could probably do within the next 6 to 9 months? I don't know. So maybe it's just fear overdone again. We shall see. But it is scary times, when you look at the news, and that's why I don't look at the news. That's why I went to the feed mill this morning. I got me some feed for my pigs, and I just put some hay out for the pigs to kind of keep them warm because the temperatures are getting a little chilly here. So let's look at our other account that the spreadsheet actually works in. There we go. Let's see how we're doing in this. Do we get any weekend decay, or are we down on our thing here? So today is 10. 923 789, and our net licky here is at, wasn't that a good session with Tom King the other day? A lot of people had some great things on that. 24,560, 24,561, something like that. We're down a little bit. 24,561. Not bad. So we're still up about 9% on the year, down $228 from Friday. Let's look at our Greeks and the ratios. See how bad off we are. Greeks and ratios are, take our groups off. And we are at delta of 82.30. So 82, what was that? 82.29. 82.29. 82.29. Look good there. And we are at a VIX of 18. I'm shocked it's not higher. But apparently the world doesn't care what happened over the weekend. So 14.5, let's say, on our buying power, 14.5. 14,500. And we're at 59%, 0.12. Yeah, everything looks really good. Everything looks really, really good. So it does say, hey, Bob, you can close this naked position if you'd like to. So do I have to? That's the question. My plan says, generally, but if I'm comfortable with the metrics, I really don't have to do anything. And I'm using 59% of my buying power. I'd like to be using 30, but what's to do? Hey guys, will y'all be quiet? I'm in the session. Thank you. Let's look and see how profitable that one is, or if it's profitable at all. Laneki 4100s with 39 days left in the trade. Let's see those 39 days left in the trade. Let's see. Nikki puts 4100s at 39. Yeah, I don't see anything that's profitable. And I mean, I'm like, why should I take a loss on something? I don't see me taking a loss on anything. 4100s with 39 days left to go. Where are those? Oh my gosh, do I not have them in here? Have I already closed those? Oh. Yeah, I don't see any that we got in there. And here's the good thing. Look at our option deltas, y'all. Remember the other day we were at option delta of 29 almost, and now look at our naked puts. We are at worse, not 0.17, 0.16, 0.14. There's really nothing to do. Nothing to do at all. So I think we're just going to hold still. And I'm curious, what are you guys doing as far as, are you hedging? Are you doing something? Are you worried about just tick pockets positive for a second? The market did, Glenn. Good. Dan says, why are you not changing the spreadsheet to reflect the high delta and BP are okay? You are comfortable with the values, but they showing as red. Yeah. So let me look at my trading plan that I just updated. Trading plan. Where's my latest trading plan? Treasury, character sketches. Sweet Bobby trading plan 10-3. This is the latest one. So let's use single page so you can look at it. And maybe I do need to update my trading plan to reflect, but what my trading plan says, buying power. So basically it says go by these buying powers. And I says for a more aggressive approach, it is permissible to run the portfolio at approximately 50% buying power at all times. So that's what my thing is. And now, should I update the spreadsheet to let it go green? I don't know. I think I know that 50% is where I want to go if I'm being aggressive. And I have decided to be aggressive on this account. So I think we're fine there. Have I given you all? Yeah, I think I did post this latest thing in here. It's got Victor's trading plan with the hedge on demand. Victor, check it out. Make sure I did it right. But I think I've got the hedge on demand in there if you want a hedge on demand. Some of you right now may be saying, oh man, with all this stuff going on in the Middle East, I need a hedge on demand. So I just don't think I do.
Hey. I'm making a video soon, so probably will be available by the end of the day on hedge on demand.
Yeah. Okay, I got you, Dan. Yeah, most new viewers may understand. I see what you're saying. The spreadsheet shows red, you think bad, right? Yeah, and it typically is bad unless you're comfortable with that risk, and I'm comfortable with the risk. So everybody knows that. If you're using the spreadsheet, it's going to tell you If you were using above 30% buying power right now, it's going to say, hey, it's red. And yeah, that typically is bad. And my deltas are red too. So it says you need negative 45 deltas. But again, my question is, I think that I can run this portfolio at 50% buying power and at up to 0.2% max theta. So I would say that even in this environment, my theta is low. Right? I could even want more theta. Does that mean I'm putting on a trade today? No, I'm not putting on a trade today. But at the same time, because my theta is low, I'm also not closing this trade either. Okay. So really, it's just it's kind of surprising, right? It's not a day to where there's anything to do, but just sit here and wait and let a little time decay and let our theta of $29 a day just come into our account. That's all I'm going to do. All right, guys. Short session, short and sweet. I will see y'all tomorrow.